forced to close both options and take a loss.
Right. Essentially, I'm going to be forced to deliver stock at 70, and I have to go out and buy it at 75. Okay, so that's a $5 per contract loss, and if I accepted $1.25 up front, that means a net loss of $3.75 a contract, right? Not a happy thing. But let's remember something. We are doing this in the context of a larger trade. You see, the radioactive profit machine itself is not an end in itself. It's a platform from which to launch other trades at a significantly reduced or no risk. This was a no-risk trade. I had nothing to lose because I collected $1.25, and now everything that I've put into the position, I'm guaranteed to get back. In fact, I'm guaranteed to make a profit. I have a negative at-risk amount. Okay, but did you catch this? I've also been paid to own this $75 call option.
Right.
I own it, but I own it at a credit. I've been paid to own it, right? Pretty cool. All right, so I'm bulletproof as far as my initial investment. I'm going to get it back, no matter what happens.
And normally when I trade a bear call spread, Kurt, I have to put up margin to cover that position. But did I have to put up any extra margin to cover this bear spread?
No, not at all.
That's right.
Okay, because that money is already on deposit in the form of the stock purchase. That's protected by a put option. Okay, so here's the deal. Okay, a few days later, I own this May $75 call, and I have no risk left at all. I've been paid to own that $75 call, and then on April 2nd, I wrote my subscribers and I said, "Hey, I'm selling May $70 call." And somebody wrote me back and said, "Kurt, you're naked." And I said, "What? Where? What?" No, he said, "You have more calls sold than you have shares of stock." I said, "Well, yeah, I know. But I'm not naked. I'm covered." How come? Well, because I own a $75 call. I've been paid to own it, and now I own it. And guess what? I'm going to sell a May $80 call against it. So I collected another $250 for that. Okay?
That's right.
And now, so what I've got in place here is a bull call spread. Now, usually a bull call spread costs money, right?
Right. So usually that.
Yeah, putting this particular one together paid me. It paid me. Okay, and when a bull call spread closes in the money, if the stock continues to go up, which it did, then what happens in a bull call spread? If the stock closes above $80, okay, which it did,
That's
then
right.
what happens?
Well, you get to close it for the difference in the strike prices. You can collect another $500 there when the stock, if it closes in the money above that higher strike call.
Okay, so on March 25th, we'll just go back a little bit here. On March 25th, all I could have gotten for selling this May $70 call was $2.76. But instead, I did a bear call credit spread, collecting $1.25 now. Collecting $1.25 now, collecting $250 later by forming a bull call spread.
When you sold
and then
the
collecting
80
and then five more dollars later when that spread closes in the money. So instead of getting $2.76 in premium, I've gotten $8.75 in premium, which is better than 3 times as good. Okay, so I do have folks that it's flattering. There's a pair out in the United Kingdom, for example, that stole my methods, and they're selling a seminar where they charge like $800 for a weekend, and all they teach is what I give away free in the sketch. They teach putting together a married put trade and then selling calls against. Well, here's something just a little bit better than plain vanilla covered calls. What do you say, Mike?
Yeah, absolutely. Absolutely.
Okay, so we've given you another income method. That's income method number 6, okay? The total outcome of the Southwestern Radioactive Profit Machine was that it netted $1,200.57 after commissions, and it took about 3 months to do that, okay? Now, that's a 16.23% gain on the total initial investment, but that's not what anybody should be impressed by. I don't think anybody should be impressed by 16% in 3 months.
Surely you can't be serious.
I'm dead serious, then stop calling me Shirley. I have what should have been impressive to everyone is that I began with 5 and 3 34%, 5.34% risk.
That's right.
At the beginning, right? After that, it goes to 0 risk, right?
Right.
For a day, I put some risk back in to where it's like 1.42, and then after that day, it is bulletproof again. Okay, that's what they should be impressed by. That I only ever had 5% at risk, and that most of the time here I was bulletproof. Okay, now I've had folks say to me that they've been trading covered calls so long that they've sold calls against their stock month after month or year after year, and eventually they have taken their stock's cost basis and paid for it by selling calls. Now, would you say that that would take like, I don't know, a month or two to do, Mike?
Absolutely not. That's many months, depending on the price of the stock.
It's probably several years.
Oh, in most cases, yeah. If I'm talking about a $50 stock or one of those higher price stocks, sure.
Right. Okay. On the other hand, I did that in 2 weeks with this. Okay. Let's compare plain vanilla covered calls salesmanship and then using the radioactive profit machine. If you buy a stock to sell calls against, you take on all the risk of ownership. Okay. So you take on 100% risk until you sell a call, and then now it's it's down to like 98% risk. Okay. You still have a lot at risk. Okay. How would you like to start at 5.34% risk? Much better, right? Selling calls may reduce your risk, but it's not going to make your investment bulletproof, at least not in a month or two. Okay, so we're going to recap again, and then move forward with income method number 3. Okay, Mike?
Absolutely.
Again, the only real holy grail of trading is risk management. Okay, and my method of risk management is to use the radioactive profit machine, which is a distinctly unique way of putting together a married put transaction. Okay? Rather than picking stocks, I like to say pick stops. And then, of course, bulletproofing, using one or more of 9 income methods to further reduce risk or to capture more upside. Rather than timing trades, I like to say trade time. Okay? So before we show income method number 4, Mike, I'd like to do another poll. Now, we had 91% either say no or mixed emotions.
Right, for the previous poll, that's right.
Right. When we said, are you happy with your results for the last 12 months, 9% said yes, over 50% said no, and the remainder said mixed emotions, which is code for no. Okay? So now here's another poll. If you're able to keep the winnings from your last 12 months of trading, but your losses were reduced from whatever they were to just 3 to 6% per trade, let's just say 6%. Okay? Would you have said yes? Would you have said no? Would you have said no but been closer to yes? What do we think? And of course, we're going to show income method 3 and
Number 3.
perhaps run a live trade. While this poll is going on, I'm going to add a disclaimer. When we do these live trades, it is not a recommendation, but rather a live demonstration. We have 8 different stocks that during these webinars, Mike and I have done these webinars, and we've gone and used the Power Options tools to find the trades, and then we've put them on real time. These particular trades in the plain vanilla account, we call it the plain vanilla account, and the reason that we call it plain vanilla is because I only show income method number 1. Which is as much as, we want to just show everybody for free. We want everybody to know about the married put setup and selling a covered call against, okay? So those are the plain vanilla trades. Anyway, we're not doing those with real money. We're just doing it real time. We're recording it as though we were putting that trade together right then, okay? Now the fishing trades, as you're looking over my shoulder, I'm doing those live with real money, okay? And a lot of our subscribers will write in and they'll tell us about the trades that they're in. Okay,
Right.
and we're going to begin to post those too. Okay, I'm going to go ahead and close the poll right now. So I just want to make sure folks understood, full disclosure here, that what we're doing is a demonstration, not a recommendation. We'd need a Series 6 license or something like that to make a recommendation. Okay, can you see that there, Mike?
Yes, sir.
Yeah, okay. We didn't have anybody say no.
Okay.
How about that? No one said no. 11% would have said no, but been closer, yes. 89% would have said yes. Now, so that's pretty good. It's like a factor of 10. We had 9% before said that they were happy with their trading for the last 12 months.
Right.
That would have been 89% if at the beginning of the year everybody knew the radioactive method.
Yeah, if
Isn't
they
that
wanted,
something?
yeah, if they limited their risk, absolutely.
How about that?
From the
From the get-go, and then the other 11% would have said no, but been closer to yes. Okay,
Sure.
so